Is it over for the stock market? We're saying Trump will do everything he can to keep his billionaire buddies and himself keep making all the dough that they can. And that means keeping the equity markets and the economy strong. And that means lower interest rates. And lower interest rates mean higher gold prices. So we remain very bullish on gold and very, very bullish on Bitcoin. So demand is going up. And demand is going up there in China. And also now with the sanctions they're putting on Russia and more on Iran, there's a fear that there's going to be a slowdown in oil disruptions.
In today's news recap, UBS stays bullish on gold for 2025 as central banks fuel demand surge. UBS predicts gold's 2025 rally could defy rate cuts and a strong dollar, fueled by central bank demand and economic uncertainty. UBS, the Swiss multinational investment bank and financial services giant, has offered an optimistic outlook on gold for 2025, despite the metal losing some momentum in December following the U.S. Federal Reserve's hawkish stance. During its policy meeting in 2024, gold surged by 27.6%, marking one of its strongest annual performances in over a decade and surpassing the S&P 500's returns. While the Fed's tone caused short-term headwinds, UBS analysts remain confident that gold's upward trajectory can continue into the new year, supported by structural economic factors and ongoing central bank demand. We believe gold can build on its 2024 gains. Although U.S. rates may fall less than expected, they are still on track to decline. UBS's chief investment office highlighted central banks' significant role in driving gold demand. The forecast reflects increasing diversification and de-dollarization trends among global central banks. Despite potential challenges, including fewer anticipated rate cuts and a stronger U.S. dollar, UBS maintained a positive stance. Reflecting the shifting economic environment, UBS lowered its 2025 gold price forecast by $50 per ounce. The bank now projects gold will reach $2,850 an ounce by the end of 2025, down from its previous estimate. Despite this downward adjustment, gold was trading at $2,639 per ounce as of last week, indicating UBS still expects the metal to rise, albeit at a slower pace than initially anticipated. Before we dive into the best clips of the week, don't forget to smash that subscribe button and check out our pinned comment for exclusive VPN offers. Protect your online privacy with NordVPN, the fastest, most reliable service to secure your data and keep prying eyes away. Plus, if you're a stacker looking for truly independent market insights, visit goldsilverstacks.com for the Stacker's Handbook, a comprehensive guide packed with strategies to safeguard your financial future and take control of your wealth. And by popular demand, we've launched our print-on-demand gear for gold and silver stackers. From stylish apparel to unique stacker-themed accessories, it's the perfect way to represent your passion for precious metals. Premium quality, shipping worldwide. Enjoy the episode.
Onto the markets. Stocks fell today. You know why they call it strong economic data? The Institute for Supply Management said that higher than expected growth in the service sector in December. The service sector. The sector of Slavelandia, working in some fucking shithole like Walmart's or something like that, one of these places. Service sector, low-paying jobs. But the treasury yields spiked, right? So the Dow was down, lost 178 points. S&P fell 1.11%, 1.11%, excuse me. And the NASDAQ was down almost 2%. So because of the high yields now on the treasuries, they say that's why Bitcoin's backing down. Bitcoin's at 97,000 a coin. It was up to about 102,000, but it's still strong And we don't see that as a reason. We still forecast it's going. But even think about this, even with the high yields, hey, gold prices went up $12 today, 2,000. I always get them wrong, the numbers. I'm good at numbers here. $2,648 an ounce. $2,648. Again, gold's up some 27% since we made that forecast last year. And oil, Brent crude's going up. I guess the global warming trend reversed itself. And now it's cold in a lot of places on the planet. So demand is going up. And demand's going up there in China. And also now with the sanctions they're putting on Russia and more on Iran, there's a fear that there's going to be a slowdown in oil disruptions. That's driving prices up. And as we're warning, if Trump keeps saying what he's saying over here and ramps up the Israel war, particularly against Iran, you're going to see oil prices go to around $120, $130 a barrel for Brent crude. And that will crash the global economy and the global equity markets. Is it over for the stock market? 5 factors to play. And as we look at the equity markets, and as we write about in our economic update, there's no relationship between Wall Street and Main Street. For the year, the NASDAQ was up 28.6% last year. The S&P 500, 88% of which is owned by BlackRock, Vanguard, and State Street, in this place we're supposed to have called a democracy, went up 23% last year, and the Dow was up 13%. So there's no relationship between Wall Street and Main Street because, according to the December 23rd release by the Conference Board, consumer confidence was not sustained in December as the index dropped back to the middle of the range that has prevailed over the past 2 years. So Trump won because, as the saying goes, it's the economy, stupid. Some 40% of Americans who went to the poll, the people who voted, economy was number one. That was the top issue. So the people are getting hurt, but the markets are doing fine. You see what's going on here?
In today's news recap, gold jitters. According to our gold return attribution model, the primary driver for gold's decline was a strong rally in the U.S. dollar index, which finished the year at its high. Softening gold's drop were a rise in break-even inflation expectations and the geopolitical risk index, likely on the back of martial law declared in South Korea, as well as small global gold ETF inflows. Global gold ETFs eked a U.S. $778 million gain in flows thanks to strong Asian ETF buying, significantly offsetting outflows in North America during December. Those outflows were quite benign given the weakness in November and the prospect of profit-taking following such a strong year. A positive sell-side outlook for gold probably helped constrain a bigger end-of-year shift out of gold. Bonds are set to stay on shaky ground, and this should help gold at the margin short-term. Gold may need to consolidate in Q1 2025 as technical signal that it resides in overbought territory. Additionally, Fed puts punch bowl back in the fridge. A 25 basis points Fed policy rate cut in December, doused with further hawkish guidance, resulted in sizable intraday wobbles in equities, U.S. Treasuries, and gold. The S&P 500 fell by 3%, and the 10-year Treasury yield marked the largest FOMC meeting move since 2013. Gold dropped by over 2%. Undoubtedly, the Fed's sober messaging prompted some investors to take profit following a stellar year for equities and gold, with tax loss selling an additional incentive to cut equity exposure. A high rate of uncertainty. The reaction probably also reflected some pent-up uncertainty that markets, as well as the Fed, soon face a change in personnel at the helm of the U.S. economy come January 20th. While the FOMC members are somewhat confident in where interest rates will be at the end of 2025, they are unusually divided on where rates will be at the end of this cutting cycle.
And again, consumer confidence was down in December. Delinquent credit card accounts are on the rise. Home sales, where they're going. This is very important. And again, going back to the Trump deal, this is part of we don't know what he's going to do. He says one thing, does another thing, does a thing, and says another thing. He goes back and forth on issues. So right now, to call where the economy is going, one of the reasons why yields are going up, they're saying that the Fed's not going to lower interest rates. We're betting the opposite. We're saying Trump will do everything he can to keep his billionaire buddies and himself keep making all the dough that they can. And that means keeping the equity markets and the economy strong. And that means lower interest rates. And lower interest rates mean higher gold prices. So we remain very bullish on gold and very, very bullish on Bitcoin. And what we're saying is it's going into dragflation. The numbers came out today from India. Yeah, it was like the worst economic growth forecast like in 2 years. And this is the fifth largest economy. Then you take a look at France, the sixth. You take a look at the UK, the fifth, what is it, sixth? I get the numbers mixed up here. Let me see got to get the numbers right. Got them here in the economic update. We write all about it. From India, the fifth largest economy in the world, to China, the second largest, to Germany, the third, Japan, the fourth, the UK, number six, and France, number seven. Economic weakness, fears of recession, and or at best moderate growth is the name of the global economic game. The United States is playing a whole different game than the rest of the world. We're still number one when it comes to that. But you got to look at the data, what's going on around the world. And that goes back to interest rates. They got to cut interest rates in other places around the world. And it's one big club, as George Carlin said, and you ain't in it. So the United States is in that club. They're not going to keep interest rates high, have the dollar soar while the rest of the currencies go down. So we believe under Trump, they're going to lower interest rates. And it's, again, the Trump is a wild card. We don't know what he's going to do on tariffs. Is he going to stick by them? Is he going to build the infrastructure like he says he's going to do? There's a lot of ifs.
What do you think about Gerald Celente's bullish stance on gold? Do you agree that it remains one of the top trends heading into 2025 despite the recent sell-off? Share your thoughts in the comments below. We'd love to hear your perspective. And don't forget to like, subscribe, and hit the notification bell to stay updated on all things gold, silver, and market trends. Thanks for watching, and we'll see you in the next video.